Hey, what's up, fam? My name is Brehon, and I would like to welcome you guys back to the channel where we love to focus on financial and personal development. Family, I hope you guys are having a great day, and I hope your week has been amazing. Now, before I get started with the video, I need you guys to hit that subscribe button while I give you guys a word out of one of my favorite books in my library, The Magic of Thinking Big. It's a phenomenal book. I think everyone should have this book in their library. The link is in the description. All right, and here it goes. Remind yourself regularly that you are better than you think you are. Successful people are not Superman. Success does not always require you to have a super intellect, nor is it anything mystical about success. And success isn't based on luck. Successful people are just ordinary folks who have developed belief in themselves and what they do. Never, yes, never sell yourself short. And this is what I always preach. You must believe in yourself and you must believe in your abilities. All right. Now, family, one of the questions I keep getting asked over and over and over again is, should I sell everything? Should I sell all of my stocks? Should I do everything, just go straight cash? And should I wait for it to bottom out and then buy back in once the market recovers? Well, listen, it's let me tell you a story, right? But first off, number one, we really don't know when the bottom will occur, right? So oftentimes when we do hit the bottom and we're on our way out of the bottom, that's when news media and all these pundits will come out and say, yeah, we were at the bottom. So oftentimes you never know when we are at the bottom. All right. So when I was back in 2007, 2008, when we had the housing market crash, we had the financial banks collapsing all around us. We had stocks that were just falling, right? Stocks were falling. I remember when a Ford had went to $1.99, right? And so I remember it was just total chaos. No one knew what the future had in store. And I had these guys that I worked with. There were two electricians with our company. And both of those guys had around $600,000. Now, when the economy and the stock started falling, his $600 went down to around $400,000. And so he panicked and he sold everything. And he said, I will never do that again. I will never put my hard-earned savings and money into the stock market again. I've lost all of this money. Now I'm going to have to work another 10 to 15 years to get that money back. Right? Well, fast forward 15, 16, 17 years, this electrician was coming up for retirement. Right? You had another electrician who said, hey, don't worry about it. Keep your money in the stock market and keep adding. Every single time you get paid, make sure 10, 12, 15% of your money is going into the market. The other guy said, no, I'm going to save 10, 15% of my money, but I'm going to keep all of my money in guaranteed interest. This happened in around 2008. So in 2020, 2021, when it's time for those two guys to retire, the one guy who had his money set aside, $400,000 set aside in a guaranteed interest account, when it was time for him to retire, he had around $500,000 total. Now, that's not bad for a person who has worked his whole life and was committed to saving some money. Well, the other guy, the electrician who stayed in stocks, who stayed investing 10, 15% of his money into the stock market, who continued reinvesting his dividends. You know, when it was time for him to retire, his $400,000 was $3.5 million. That's correct. $3.5 million. And so when it comes to the stock market, it's a roller coaster. It is highs and lows, highs and lows. But ultimately, long term, the stock market always rebounds and it always goes higher than previously before. And so if you're thinking about pulling money out of the stock market, don't do it. Continue adding money into your account every time you get paid, every time you get a chance. If you are having 6 to 7% drawn out of your account for your retirement account, bump that up to 10%, bump that up to 11%. These are the times where we must make these sacrifices to better ourselves in the future, because there is going to be a great opportunity for us to create wealth. It's going to be a great opportunity for us to really, really grow our retirement accounts tremendously. But that begins with commitment. You must be committed to saving. You must be committed to investing. You must be committed to the end goal. All right. Now, if you're doing 3%, 5%, and when you bump it up to 10% or 12%, it will sting at the beginning, but you will get used to it. You will get used to not having that money taken out of your check, and you'll be able to make a smooth adjustment. All right. Eventually. But again, we must make the sacrifices now, because we don't know how long the market is going to be low like this. I think it's going to go another 10-15% lower. I really think 2023 is going to be a rough time ahead. And what we want to do is we want to keep buying stocks through the rough times, because once we take off again, you're going to have a regret, and you don't want to regret missing out this time around. All right. Now that's all I have for you guys. I just want to share a short story with you. There's always opportunities to win in this market. If you're a long-term investor, if you're a day trader, if you're a swing trader, if you're an options trader, but ultimately long-term investing will always trump and beat all of these other plays. And remember this, 95% of day traders lose money in the stock market. All right. 95% lose. And so if you're a long-term investor, you're investing your money in the stock market long-term, you're going to have greater success. You're going to have greater runs of success in the long term. All right. Now, family, again, my t-shirt here, Scared Money Don't Make Money, sold on Amazon. It can be shipped to you in a couple of days. I hope you go out, grab these t-shirts, support. Hey, hit that subscribe button. Keep coming back for more wealth building information, and don't stop investing. Peace.